Imagine watching a forgotten corner of medicine, one so stagnant that investors never even bothered modeling it, suddenly erupt into one of the most violent re-ratings in the biotech sector. It is the kind of jolt that forces analysts to rewrite assumptions in real time. And before we dive deeper, if you are watching this through Shorts, you can tap the full version link below to hear the complete analysis without interruption. Also, a fully updated trading strategy reflecting the current setup is included later in the story, so make sure you stay with me until the end. The shock came from Insmed, a company that took non-cystic fibrosis bronchiectasis, a disease with literally zero approved treatments through all modern medical history, and turned it into a center of global attention almost overnight. That kind of narrative inversion is rare. It violates how respiratory drug development usually works. Typically, when a disease has no approved mechanism-based therapies, physicians fall back on symptomatic management. That means antibiotics when flare-ups occur, airway clearance devices, inhaled bronchodilators, and recurring hospital visits. That stagnant approach becomes the norm because no company sees a regulatory pathway, no agency sends a signal of opportunity, and no investor sees a monetizable market. The disease becomes clinically tolerated and commercially abandoned. That is what made Insmed's scientific choice so unconventional. Brensocatib targeted DPP1, the enzyme that activates neutrophil serine proteases. These proteases are like tiny corrosive blades that carve long-term structural damage into the lungs. Most respiratory drugs avoid this upstream intervention because it carries many risks. Companies usually go downstream and manage inflammation or infection after it happens. But upstream inhibition holds the promise of altering the disease trajectory itself. That difference between managing symptoms and altering progression eventually became the core of the Insmed narrative. When the phase 2b Willow data appeared around 2020 showing delayed time to first exacerbation and reduced flare-ups, regulators moved faster than they normally do in respiratory medicine. The FDA granted breakthrough therapy designation, and the EMA granted PRIME status. These designations are usually reserved for therapies addressing severe high unmet need conditions. For this to happen in bronchiectasis, a disease that had always been clinically sidelined, was an anomaly. And in regulatory behavior, anomalies often signal deeper recognition that a long neglected space may finally be entering a legitimate therapeutic era. The global ASPEN Phase 3 program, running from 2021 through 2024, strengthened that signal. Unlike most respiratory trials that focus on symptoms or patient-reported questionnaires, ASPEN used high-resolution CT imaging to measure structural changes. Structural imaging is almost never part of respiratory registrational trials because most therapies cannot measurably slow structural decline. Yet in early 2025, ASPEN showed both reduced exacerbations and slower CT-measured tissue deterioration. That finding was not normal. And when a chronic lung disease shows structural response, investors interpret it as evidence of true disease modification. Approvals in 2025 made the impact even clearer. The FDA approved brensocatib on August 12, 2025. That made it the first and only approved therapy for non-cystic fibrosis bronchiectasis. The CHMP issued a positive opinion on October 17, 2025, under accelerated assessment, something rarely used in chronic respiratory conditions. The European Commission granted full approval on November 18, 2025. Accelerated assessment usually appears when a therapy offers a step change in public health value. Its use here implied that regulators saw brensocatib not as another respiratory drug, but as a structural turning point for a neglected condition. And then came the most dramatic deviation from normal patterns, the commercial launch. Typically, first-in-class respiratory drugs generate only a few $1 million in their first quarter because adoption is slow, payers restrict access, and physicians wait for real-world experience. Instead, brensocatib posted around $28 million in its partial first quarter, roughly 4 times higher than the 7 million analysts had predicted. More than 1,700 physicians prescribed it, and more than 2,500 patients initiated therapy. These adoption metrics do not match historical launch curves. They suggest the existence of suppressed demand, meaning patients and clinicians had been waiting for a mechanistic therapy in a field where none existed. During the same quarter, Arikayce delivered around $114 million, confirming that Insmed was not only scientifically ambitious but also commercially disciplined. Total revenue reached around $142 million, more than 50% growth year over year. In 2024, Insmed reported roughly $364 million in revenue, nearly 20% growth. Analysts projected that revenue could exceed $1 billion in 2026, up from an estimated $600 million in 2025. Normally, after a first approval, biotech companies experience gradual multi-year revenue expansion. Insmed's acceleration signaled a structural market expansion, not a slow build. Despite this momentum, the technical picture showed areas of caution. By November 21, 2025, shares traded near $199. The 50-day moving average was around $167, and the 200-day average around $90. Trading this far above long-term averages often indicates a stretched trend. The relative strength index near 69 added to that interpretation. 19 analysts rated the stock a strong buy, but the average price target clustered near $173. This does not signal doubt. It signals that the narrative moved faster than analyst model revisions, a common pattern when markets price structural change before formal forecasts catch up. The broader logic remains unified. For the first time ever, non-cystic fibrosis bronchiectasis has a validated mechanistic therapy with regulatory endorsement across major markets. The early commercial data suggests deep and previously unrecognized clinical demand. The pipeline expansion into chronic rhinosinusitis without nasal polyps, hidradenitis suppurativa, and TPIP for pulmonary arterial hypertension and fibrotic lung disease adds asymmetric optionality. This leads into the trading implications. In the short term, pullbacks toward $185 to $190 represent healthy consolidation after a strong upward run. In the medium term, retracements toward $160 to $170 historically align with renewed institutional accumulation. In the long term, entries around $140 to $150, closer to the 200-day trend line, represent multi-year conviction levels for investors planning to hold through global commercial scaling. Before we close, a sincere thank you to those who watch, subscribe, like, comment, and share these analyses outside the platform. Your support directly enables deeper research and higher quality content, and I intend to continue raising the bar. This was ValueStir.